Hi everyone, this is Chad Shoop with Automatic Profits Alert, and today I'm going to talk about a topic that comes up a lot. So I get asked all the time about ETFs. People wonder what exactly is an ETF and why would you use ETFs to invest? So today I'll take a few minutes to discuss this topic and I'll share some insights into ETFs in general. Now, getting the questions about ETFs are not surprising. That's because the ETF industry has exploded over the last 3 years. Just a couple of years ago, there were only a few hundred different ETFs to trade on the market. Today, there are more than 5,000. So to put that in perspective, there are only about 4,000 US stocks that trade in the market. So that means there are officially more ETFs to trade than the stocks they are set out to represent. Wow, that's a lot, okay? Now remember, an ETF is set up to track a specific group or subgroups of stocks or other tradable assets in the market. So basically, all of these ETFs are based on some sort of stock relationship. And in doing so, they have created more baskets of ETFs than actual stocks. It's somewhat crazy when you think about it like that, but it is the reality at the moment. And that's why I get so many questions about what exactly is an ETF. So what does ETF stand for? It stands for Exchange Traded Fund. And all that means is that it is a fund that is set up to track a certain group of assets, like stocks or commodities. And it is traded on an exchange, just like a stock that is traded on the New York Stock Exchange. And because of that, ETFs are typically very easy to trade. And you should be able to buy most of them in your normal stock trading account. However, there are going to be exceptions. See, some ETFs, they're structured differently. And that means there are some brokers who either won't allow you to trade certain ETFs or the brokers will flag them as risky for you. Now, most ETFs that are set up to mimic the return of a benchmark do that by simply buying the stocks that represent the benchmark. But there are some benchmarks that are more complicated than just buying stocks. For example, inverse ETFs. They are set up to track the inverse or opposite return of a benchmark. Now, to do that, they can't simply buy the stock. So the ETFs use derivative contracts to create that inverse relationship. And that makes those ETFs more risky compared to other regular ETFs. So any ETF that is structured with derivative contracts, like inverse ETFs, they're not a good ETF to hold for more than just a few months. But I still use them, but I only make sure to hold them for a couple of months and I monitor them daily. Regular ETFs, on the other hand, can become useful when you have a sector that you expect to rally. Let's say you think the financial sector will rally 5% by the end of the year, but you're not sure which stocks will lead the way. So instead of having to pick a winning stock, you can simply buy a financial ETF to benefit as the sector rallies, because the financial ETF is invested in a broad basket of financial stocks. So the ETF will give you exposure to a wide variety of financial stocks or other tradable assets with ease. Now, when it comes to choosing the right ETF, and this is important, be sure to note the leverage of the ETF. Many ETFs come with leverage of 2 or 3 times the sector that it is tracking. That means if the financial sector goes up 5% and you add 3 times the leverage, that would be a nice 15% gain. But just keep in mind, this works to the downside as well. If the financial sector fell 5%, your losses would be 15% thanks to the leverage. And I just want to point out a key difference between owning an ETF versus owning an individual stock. See, when you buy an ETF, you have no ownership over the stock. That's because you own it indirectly, not directly. That means you have no voting rights, and the fund itself receives the dividends and distributes it amongst owners of the ETF. Well, that's all I have for my video today on ETFs. And if you have any other questions or comments on ETFs, be sure to comment below. If you like this video, be sure to subscribe to our page and continue following us. Until next time, this is Chad Shoop with Automatic Profits Alert.